Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. Today is January the 24th. Before we get into it, I need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're looking at are real-time market snapshots and may not be replicated going forward. First market we're going to cover is the Australian US dollar. Well, the Aussie USD is tough. It came back nicely today. Let me put the monthly central pivots on here to give you what we look at on a day-to-day basis. Very interesting that you couldn't even get down to that pivot. You couldn't get to pivot support 1 here, so it popped back up and it's testing the central pivot there. You see our directional lines there, our weekly and our monthly, our weekly and daily monthly directional lines are bunched up there. So essentially your weekly is still down, but boy, it's really telling. I thought we were going to see another leg down. I guess that was kind of wishful thinking, hoping we could get down to 96 or so, get a deal on this guy. Well, if it's gonna, it didn't do it today. It wasn't moving in that direction today. You know, you're tightening up this range, so I suppose it could still pop either way. If you close above that congestion right there, you've got the central pivot, the weekly directional line, the daily directional line. Boy, I'd have to say you have some upside if you can close above there. You know, on the other hand, I guess we could still hold out hope for a test of the month, well, at least approach the monthly directional line here, maybe approach to 96 even. I would like to see that. But, you know, it's going to do what it's going to do. If it closes above here, I think we're back on the upside. We definitely want to watch this guy the closer we get to the first of the month, as we wrap up January. Next market, Euro US dollar. You had some pretty good upside in the Euro US dollar today. Again, that market's lined up pretty nicely. You know, when you have your weekly and your daily pushing and pulling in the same direction, in this case, pulling in the same direction, I should say. When that's lined up like that, it's tough to make hay on the short side, and that's been the case, and that's why this market's been pretty good to guys buying dips or otherwise taking buy signals. No problem closing above that pivot resistance 1 Friday, so I would imagine that opens the door to pivot resistance 2 at some point this week. Overall, you can still see, you know, the monthly's down. However, this guy, you know, it's a slow, steady mover. Look at that steady momentum to that guy too, and that's when you see a nice steady move like that, similar to what you saw in September and October, similar to what you're seeing now, it's tough to bring that down. I definitely have to say the risk environment is pretty favorable for this guy right now. Not a lot of risk out there. That's what that means when you see a steady rally like we saw here in the summer and then the fall here and now. When you see that, not a lot of risk out there for a market. Pound US dollar, you know, I didn't even look at the pound today. I was enamored with that Aussie and the Euro. You know, here's another steady guy that you know, the dips are being bought. Players are still buying the dips. And here's another guy where I would imagine you're gonna test that your monthly R2 pivot. So I think 162 even. You're right around 160 now. So I would think at this point 162 is in the cards for this guy. Let's check out dollar CAD. Dollar CAD. Only pretty small range today. I'm not sure if it's giving me the correct range here. That looks familiar. Well, kind of a boring market. I think overall, though, this market's headed lower with the monthly down, the daily down, the weekly down. Now the chief. Very strong. Dollar chief strong in sympathy with the euro and the Aussie also. you had dollar weakness across the board in the majors today, and definitely the case here. With that, you're in a pretty big counter trend range right now with the monthly down and the weekly up like that. I'll show you how to take advantage of that. When you can see you're in a long-term counter trend range with the higher time frames are telling you that. Then you just look to take sell signals. Here's probably a good example of a sell signal. And you just swing trade it. Trade it either way. And there you go. When it closes below that pivot, you look for the sell-off, and there you had it. That's how we would look at that. That's how I approach it anyway. I think overall, you're in the process of putting in a pretty big bottom here. But for now, you're counter trend. You're down on the monthly, up on the weekly, so that's a pretty big gap in between there. So you're just going to look to swing trade that guy back and forth. I have no bias either way. Just take the swing trades as they come. Dollar yen. Our good friend, the dollar yen. There we go. That's interesting. It held up okay today despite dollar weakness in the majors there. The dollar yen didn't weaken really at all. Here's another guy where you're in a big swing trading range as far as I'm concerned. You see you're below my monthly directional line. You're above my weekly directional line. So that's a range-bound market. So you just take the signals as they come. You just swing trade it. Swing trading means you don't have a bias. You just focus on setups and signals and execute as they come. And I think that's a pretty good way to approach this guy right here. I think, like the Swissy, he's in the process of putting in a long-term bottom, but that could be a drawn-out, iffy affair and tricky to trade it if you're a trend trader. If you're a counter-trend trader or mean reversion trader, though, that market can be your best friend. Hey, let's look at the U.S. stock market, and then we'll wrap it up. Kind of a slow news day today, too, huh? I think that, just from, I'm reading the tone, gauging for the tone of some of your journalists and some of these people that write on the blogs, and even the good ones, they're starting to grudgingly admit that there's no bad news out there. And I don't think they'll ever come out and say, hey, we were just way too pessimistic down here. But the tone is starting to get a little bit more positive. I think there's still plenty of room on the upside here. I'm a big believer that the chart reflects the fundamental environment out there. If you look at this big, long, intermediate-term trend, it's telling us one thing. There's very little risk out there. So I think you'll see some more upside. I guess it was wishful thinking, hoping you'd get a correction down here. I remember just, was that Thursday, even Friday, I was saying, hey, it looks like maybe we'll get a correction down here. I wanted to see that. You're really not getting it. Look at how quickly it resumes the upside. That's a tough market. That's a strong market. And, that's the way it is. So, I'm a big believer that, what's on the chart, that's what you get. That's a reflection of what's going on in the fundamental business cycle. So, hey, as long as the stocks look good, that's going to be beneficial. That'll be supportive of Australian U.S. dollar, and the major currencies are liking it too. So it doesn't look like much is changing. The business environment is improving weekly. Your asset class markets are holding tough. Every time they have a correction, it's a very shallow one, as we're seeing on this chart, and the same with the Australian U.S. dollar. And against this backdrop, against a fairly weak U.S. dollar. So to me, that's good news. I like when the asset class markets go up. I don't mind too terribly much when the U.S. dollar goes down, and that's the way it is. I'm Jay Norris. Look for my new book, Mastering Trade Selection and Management with McGraw-Hill. That'll be out in the spring. We look forward to that. Hey, thank you very much, and we'll catch you back here tomorrow.